What is up, everybody in YouTube? I'm Jay with DCA Adventure, back again with another video on the basics, on the basic indicators for new traders. This is not financial advice, and we would really appreciate it if you'd hit the like, subscribe, and bell for notifications. Helps us out a ton. Also, if you guys would like to join our Discords, we have the DCA Adventure Discord, we have Crypto Mentors Discord, and the Family Mind Discord. Links will all be in the bottom, and you can also join the Patreon group. Joining the Patreon group will give you private access to a channel in the Discord and to the DCA trading script. You will have to join Trading with the View. That is my tier. Go into Patreon, and I'd be very, very grateful if you joined. But let's kick this right off. Today, I want to talk about some simple indicators that I learned when I first started trading. These are very, very easy to learn. Again, we are only going to do the basics. I'm going to cover the basics. I'm going to show you how to use them right. You can dive in deeper and learn how they are calculated and who made them and how long they've been around. You can do all that stuff on your own, and in my opinion, that's a really good exercise for you guys to do. It'll just help you understand them more, and you'll know why the indicator does what it does. After watching tons and tons of videos and researching a ton of stuff on technical analysis when I was new, the biggest thing I hated when I was trying to learn something is watching a video for the first 3 hours. It was just going over how the thing was calculated, and I would just rather get to the point, keep it short and sweet. That way, it keeps everybody interested. But for the most part, every indicator that we are going over today is a price momentum oscillator, just meaning that it moves up and down from an overbought or oversold area. And it'll be on the bottom of the chart. It does not overlay the candles. For the very first one I want to talk about is MACD. It's a moving average convergence divergence. It's a trading indicator used to reveal changes in strength, direction, momentum, duration of a trend in an asset's price. One thing with the MACD, I'd like to start off saying I use it on a higher time frame. I have a really good friend of mine who trades the one-day chart and the MACD, and that's the only thing he uses. He doesn't use nothing else, and he has been very, very profitable. But there's two different ways to read the MACD. It's not how everybody would think. Especially when I first learned, I learned the complete wrong way how to read it. I was basically only watching the crosses, and I'll show you what I mean. But basically, the MACD is a relationship between two moving averages, okay? And what it does is they are from periods, just like your moving averages would be, your 26 period, your 50 period, your 100 period. The MACD is going off of two. It's going off the 26 period, and it's going off the 12, okay? And we'll just jump right in here, and I'll show you an example of the way it works. Now, there's many variations of the MACD. You have MACDs that have simple moving averages, and then you have MACDs using exponential moving averages. The MACD that I use, and that 90% of everybody else probably uses, use the exponential moving averages. And before we get any farther, I want to say too, with the indicators that I'm showing you today, and this goes for most indicators, unless you're building your own custom like we have done with our scripts. But most indicators, you want to trade them on the default setting. And the reason why you want to do that is because you probably have 500 million other people using the exact same indicator on the exact same default setting. So, what do you think is going to happen if 500 million other people are looking at the same thing you're looking at, and you guys are all thinking the same thing. Whatever the trade plan is, there's a greater probability that it's going to come into fruition and that it'll play out. So that's why, in my opinion, I think it's best to just stay with the default settings on that. But let me get this stuff off I have here and get into this. Okay, you'll just go to your indicators and you'll type in MACD. And it's the very top one. Just click it. And then I usually go down and make my lines bigger so I can see them a little bit better. We got orange and blue. The signal we'll keep red. And we'll make it big. Keep that blue. Make it big. And I'll take the histogram off right now and just talk to you before the histogram part. Alright, MACD, there's two ways to use it. Trends and reversals. Okay, not many people know that. Most people think that you trade MACD just off the two lines crossing, which is fine. You can do that, but you're also reading it wrong if you're only doing that. Okay. So MACD, you have a 0 line right in the middle. Then you can just put the line on there, go into your settings, go to coordinates, and in here just type in 0, and then it'll put it right there at the 0 mark for you. Okay. Now, when we are above the 0 line, we are bullish or in an uptrend. When we are below the 0 line, we are bearish or in a downtrend. So I will show you how to do the trends first, and then after that I will show you the crosses. But as you can see here, we are above 0. So like if I'm trading the MACD, you can trade off the crosses or you can trade when we do the trend. So let's say you wanted to long and we were down here. Wait until we break the 0 line. Once we break above it, now we are in an uptrend. You could enter in above the 0, right above it. And then as you can see, you can ride that all the way up. We got that nice little run right there that you could have got in here to 0. Yes, you could have got in down here too, but you always have to remember, lows can go lower and highs can go higher. Just because we get across does not always mean that 100% that we are going to go in the opposite direction and we're going to go in the opposite direction fast. Okay? And this is why I'm going to show you this trend strategy. So we did our long, we got in right at the 50, we came up here, and we got out at the top. And I usually will get out at the top right where they cross. Okay? And then same if we were wanting to short. Yes, you could have got in up here at the cross and shorted all the way down. Okay, or you could have got in at the cross and it could have zigzagged around a little bit more and then went up, and then you didn't do anything. So if I'm shorting, to make sure, I'm going to wait till we break the 50 and I'm going to enter. Okay, and when we broke the 50, look, we were right here, right in this area. Back here. So that would have lined us up perfect. As soon as we broke the 50, or sorry, the 50. As soon as we would have broke the 0 line, I'm sorry, I don't know why I called it 50. As soon as we would have broke the 0 line, I would have entered in. Okay, and then that would have been a nice drop. And then over here you can see another one for a decent, it would have been a decent little long, but you could have got in here as soon as we broke the 0 and then got out up here at the cross. Right here you could have entered in short, we broke the 0 and we rode all the way down, got out at the cross. But here, if you would have got in here, if we broke the 0, didn't you just say we break to 0, we go to an uptrend? Yes. but you don't know how long. This is why you need to use a stop loss. Okay, stop loss. Right here's another good play. We could have went long here, broke to zero, and then exited here at the cross. That's just a way to find trends and to trade the trends with the MACD. You talk to people about the MACD, and they're not even going to tell you about this part of it. When you talk to other traders about MACD, they're just going to tell you, yeah, trade the crosses. And I'll show you those here in a minute, because yes, you can trade the crosses, and that's fine too. But this is just another strategy to look at. Keep in the back of your head. Move this back to 0. Okay. All right. So, this is where the histogram comes in. I personally do not use it. I'll tell you here in a minute why, but I'm going to show you how it works first. Okay, so basically, all this histogram is doing is it dips below 0 and it goes above 0. And all it is telling you is when them lines cross. Okay? So, you can see here, we're coming down, and then right here in this area, we flip from red to green. And when that happens, our lines crossed. Here we got another one. And when these lines cross, is basically telling you reversal. These are reversal trades. Flip from green to red, and here we go, we crossed. And another thing to make note of too, when the blue line is riding above the red line, we are in an uptrend, and vice versa. Or not in an uptrend, but the price is moving up, okay? And vice versa. When the blue line is underneath of the red line, the price is moving down. I almost said downtrend, but yes and no. It just means that the price action is moving down, okay? So, I'm almost 100% sure that you guys watching this video all have eyes. Pretty sure, right? I mean, you guys are watching this, so you should have eyes, correct? So that means you can see these lines crossing without the stupid histogram on there. You don't need to use that. To me, it is just clogging up the chart. It's too much noise. That's why I don't use it. One of my biggest pet peeves is when I see somebody teaching anything about trading and they have every indicator known to man on their chart. You do not need 50 indicators on your chart. It is too messy, too noisy, too complicated. Eventually, the indicators are going to start contradicting themselves. And in the long run, what's going to happen is you are going to make poor trading decisions and you are going to lose your money. So it is very important that you just you find a few indicators that work good for you. You build a strategy around them indicators, and you figure out what works. Okay, as a new trader, you are going to lose money. You're not going to be able to come into the market and kill it right off the rip 100% and never lose. Even the most wealthiest traders lose. I mean, you will not win them all. You just have to make sure that when you lose, you take proper risk management and you only lose a little. And when you win big. All these indicators and everything that I'm teaching today and talking to you guys about today, you could say screw every single one of them and come get the DCA trading script or the Crypto Mentors trading script, because we have all these indicators coded into them and more. So our scripts basically took all the important indicators, the most important indicators, and we put them all into one. Our developer in the Crypto Mentors Discord, AstroPark, the guy, you guys have heard me talk about him before. He develops new stuff weekly. Every week we're getting new scripts that he does. But we are collaborating together on some stuff for DCA, so be on the lookout for some updates for sure. But definitely, you guys need to get in and get the scripts, because I'm telling you, all this stuff we go over is already wrapped up into one, and you don't need to even know how all this stuff works. You just need to learn how my script works. But if you don't, then here we are. So we will take this off. Okay, and that's your MACD. That's the basics of it. You can go way more into depth with this, like I said, with any of these that I talk about today. But we're just going to keep it short and sweet. All right, our next one is the RSI, Relative Strength Index. It's a momentum indicator that measures the magnitude of recent price changes to calculate overbought and oversold areas. Okay. Where's all my notes? Keep myself in line here. I like the RSI. The next three indicators I'm about to show you, the RSI, the stochastic RSI, and the money flow indicator, all three of these are basically the same, so it's going to sound like I'm a broken record trying to explain all three of these, but they're the most easiest to use, I think. And you like our RSI, it's better for trending markets. The stochastic RSI, it is better for choppy markets. It's a little bit faster. The difference between RSI and stochastic RSI is the stochastic measures the relationship of current price to the average price for a particular time frame, while the RSI measures rate of change of the price for a particular time frame. Basically, the RSI's main job is to tell you when we are overbought and when we are oversold. Okay, we'll go ahead and get right into some examples. Same thing with the RSI. You are just going to go to your indicator tab. You will type it in, and it's the very first one. Okay, on your RSI, you have your overbought and your oversold. Anything that is over 70 is overbought, and anything that is below 30 is oversold. Okay. Now, this is how I look at this. Anytime that we are moving up, we are bullish. People think that because we get over the overbought, we get into overbought area, we break the 70 mark, that we're automatically bearish. No, this is not right. Same with vice versa. They think that when we break the oversold line on the 30, that we are bullish. And no, we're not. That is not right. Because again, remember guys, highs will go higher and lows can go lower. Not necessarily every time, but it can. And I trade the RSI the same way. Okay, let's say I was wanting to short, and I see, okay, we broke the 70 over here, so we are in the overbought area. That doesn't mean, oh my gosh, hurry up and short right now, because look, we came down, we came right back up. That could have been liquidation, depending on what your leverage is and what you're doing. So how I do this is I will enter when we break the line. We are not bearish until we come above 70 and then we come back below it. That's when we turn bearish. Okay, guys? Not as soon as we get up here. That's wrong. We ain't bearish until we are down here. This is a bullish move. When we get into the overbought, that's bullish. We're pumping. We're moving. Okay? So If I'm shorting here, I'm going to wait till we break that 70 line, and then I'm going to go ahead and enter my short. And then look, we rode that thing all the way down. I'll write it all the way down into the oversold. And, you know, most people will be like, oh, that's perfect. You get out all the way down there. But no, I don't take profit until we get close to the 30 mark again, okay? Because back here, we could be zigging, zagging, and coming up and down, up and down. Super easy strategy. Same if we were going too long. Okay, I'm not longing. Let me see. Move this down a little bit. Oh, just clicked off all my stuff. Okay. So if I was going too long, I see down here that we're way, way, way in the oversold area. But I'm going to wait until we break that 30 mark. Get my lines back up here. We break the 30 mark, then I will enter. And now I'm riding it back up, and boom, we break the oversold, or the overbought, and now I wait. Right back down to the 70 line, and then that's where I'm going to take profit. Okay? Simple. Super, super simple. And the stochastic RSI I trade it the exact same way. The only difference is the stochastic RSI runs a different algorithm, and there's two lines. You got your K line and your D line, and the only thing with those lines is one's faster, one's slower. So on the stochastic, you might see the red line is a little bit farther than the blue line. That's just because one moving average is or one calculation is slower than the other. So I will show you that real quick. Yep, take this off here. Second one down. Go in here and I'll make this bigger for you. K and D. Okay. So, same type of thing. You have your 80. And your 20. Now, this is 10 different than the regular RSI. RSI is 70 and 30. This is 80 and 20. And notice that when your blue is over your orange, which if you don't know which line is which one's K and which one's D, all you got to do is click on it, go to your settings, and then right there your K is your blue and your D is your orange. Okay, and I do the D is slower and the K is faster. Okay, but notice that when your blue is over your orange, the price action is moving up, and vice versa. When blue is under orange, price action is moving down. I trade this the exact same way as I do RSI. Okay, if I'm longing, I'm going to wait until we break the 20. Once we break the 20, I'm going to enter, and I'm going to ride it all the way up until we get to the overbought. And right here is a perfect example. Just because we are an overbought does not mean, holy crap, let's short, let's freaking bet the farm. No, stay in it, because you can kind of look at the overbought and oversold lines as support and resistance, I guess. In a way, you can see that, yes, we did get up here into the overbought, but we are riding it down. Well, not down, but riding it, right on top of there, and we cross, then we break down. So, watch your line crosses, and it's the same thing, okay, as the RSI, just with two lines, but we're trading them the same. And the stochastic works better in a choppy market, lower time frame. Get down to the 1 hour. Now you can see here, we crossed, and it was just a wee little dip right there, and then we bounced right back off of it and shot straight up. And that's a divergence there, and that'll be a different video. Divergences happen when the candles and the oscillator do not match, is the simplest way I can say it for you. There's a bearish divergence and there's a bullish divergence, and basically, I'll kind of just I won't explain it in too much detail, but I'll just kind of show you what a divergence is. We got our oscillator going down, and we got our candles moving up. We'll get into that on a whole different video, but this is another thing that you can throw in to make a strategy around this stuff. But good for you, the DCA script has divergences coded into it, so you don't even have to look for them. They will automatically just be printed. They'll show up when they happen. It prints bearish, bullish, and hidden divergences. Super easy strategy here too. It's kind of like a MACD and RSI combined, I guess, because of the two lines. But yeah, super easy. And again, guys, don't think that because we get to the overbought that immediately short, because you can see here and you can see over here that wasn't the case. Don't enter until we break the line. Same with your longs. Don't enter until we break the 20. Our next and final is the money flow index, and you guys in the Discord sometimes hear me refer to this as the smart money. But the money flow index indicator is used for measuring buying and selling pressure. This is done through analyzing both price and volume. Money flow index is a hybrid of a volume weighted average price, VWAP. This is a whole separate indicator, the VWAP. It's just telling you that it's like this. And a relative strength index, RSI. It's basically what the MFI is regular RSI, stochastic RSI, and volume all added together. Okay. Again, my script has the VWAP coded in there, and it has the money flow indicator coded in there. It has stochastic, has regular RSI coded into there, has momentum waves coded, it has MACD. And it has all that stuff in the background there. So everything that we're going over, we have a script that does all of it. You can use the RSI for an added layer of information that can help you make better trading decisions. So we're going to go over here, go to indicators, go to MFI. Either one of those is it. And as you can see here, there's tons of different variations of the money flow index. There we go. Same here. we got your 65 right here, and you got your 35 right here. And basically what the MFI is doing is showing you the flow of money coming in and showing you the flow of money coming out. Okay? So basically, when anytime you see this thing curl up and we break the middle line at 50, it's a strong trend that we're going up. And when we get up here above the 65, it's kind of like an overbought, oversold level. And same down here. This is your oversold, this is your overbought. Basically saying, you know, when we get a ton of money flowing in, you're going to get ready for a ton of money flowing out. And I trade this the same way. We break the overbought at the 25 line. We break this here. I'm going to enter long. Now when we get to the middle line, I'm going to be watching, because look, you can see when we got to the middle, boom, right there, red candle. And we could have kept on coming back down, but we didn't. We kept on going. So rode it all the way out until we got up above the 65, and I will ride that all the way. I won't take my profit until I start to see us get back down here to the 65. Once we break below it, then I will take my profit. But you're saying, Jay, I just lost money right here. Guys, do not be worried about winning every single dollar. You will lose trying to catch the tops and bottoms. It's like catching a falling knife. It is so hard to get the exact top and the exact bottom. If you're in profit and you're using this strategy, take your money and run. Quit trying to be precise, because you're gonna end up losing. One of the biggest things I struggled with when I learned how to trade was taking profit. I was always worried about missing out on gains. You can't do that, you guys. You got to just take your money and run. The market will always be here. There is always going to be opportunity, no matter what. We are always going to be able to trade. So, like I said, you're in profit. It's decent profit. Take it. When you are developing a trading strategy, you need to come up with a number, a percentage of what you're looking for in every trade. That way, if you get, 5-10% profit every time on every trade, take it. Who cares if you could have went another 10 or 15%? You were safe, you took your money, you ran. Especially with Bitcoin. Bitcoin is pretty damn finicky. It does some weird shit sometimes. We could be in a clear uptrend and everything looks great, and then all of a sudden a huge whale comes in and then just craps all over us. So, use these basic little strategies that I've showed you. I'm telling you, it'll help you a crap ton in learning how to spot trends and reversals. These are very super easy strategies. Look them up if you want to figure out how they're calculated and you want to get into all the nitty gritty. Good for you. That just will help you more. It's not necessary, but it will help. And this is basically all I got for you guys today. I wanted to keep it short and sweet, because I know that when I watch videos of other people teaching stuff, I can't stand watching 3 hours of how the indicator was calculated and who made it and how long it's been around and blah 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 blah. I just want you to get to the point and show me how the hell to use it and then go on about my day. So that's kind of what I wanted to do for you guys, and keep them like this from now on. Real quick, I want to take this off and pull up the DCA trading script real fast so you guys can see that you do not need all them when you can just come get our script and have everything in one. Okay, so our top script that overlays candles, we have EMA ribbons in here. This thing will tell you when to take profit, when a downtrend is starting. Over here on the bottom on the oscillator, you can see here's our divergences printing. This is when our oscillator is moving down but our candles are moving up. That's a bearish divergence. Let's see, I'll mark it out for you here. Candles going up, Candles going up. Dang it. Candles going up. Oscillator going down. Candles going up. Oscillator going down. Candles going up. Oscillator moving down. And then same with we got a small bullish divergence down here. Okay, this is when our oscillator is moving up and our candles are moving down. So here we got our candles moving down and our oscillator moving up. And then in here is really hard to see, but this is a hidden divergence here. And that's why we got this little pop-up right there. See if I can go, see if I can find any better bullish. Here's a couple. So here our oscillators going up, our candles are moving down. But the oscillator has, you got your blue and orange waves, those are momentum waves. I just showed you the bearish and bullish divergences. Your money flow index is this green and red cloud. The VWAP indicator is the yellow cloud, which we did not go over. And we have RSI, stochastic RSI, and MACD coded in here as well in the background. That's how you get your I'm screwing everything up. That's how you get your overbought and your oversold levels right here. Okay. And that's what's printing the dots. The dots are saying, hey, we are in the overbought. And then you got your green dots down here saying, hey, we are in the oversold area. So be ready for movement to start to go up. Not saying it's going to go up right now. Just get ready for it. Okay? But this script has everything we just went over coded into it. And our Patreon group is, my tier, Trading in the View, is $25 a month, which this script is worth way more than that every month. There's several variations of the same thing that people are charging way more for it, so you're getting a hell of a deal by joining the Patreon. But you can come over to the Crypto Mentors Discord, and we have all kinds of different scripts. We got scripts for scalping, we got swing trade scripts, we got long-term, medium, we got all kinds of different stuff. Our scalping scripts are pretty sweet too. AstroPark is a developing machine. One of my most favorite ones that he's done so far is the Super RSI indicator. Using that with the Crypto Mentors or the DCA oscillator, using them both together, they really complement each other, and it's given me a hell of an edge on the market. Just the script alone is really paid off for me big time. But that's pretty much all I got for you guys today. I wanted to keep it short and sweet for everyone. But please hit the like button, subscribe, and until the next time, I hope you guys have a good night. Later.